All right, so in case you've just joined in, there's a vertical up move that you've seen in the stock price of ITC, and that's because the company has reported its results after a very long time during market hours. And it seems like it's a good set coming in from the internals that we're looking at. The revenue has come in at a little over 16,500 crores, slightly shy of street expectations out there. But the internals are pretty strong. So the street was working with a revenue of close to 17,000 crores. The company has reported a revenue of 16,579 crores. So that's a miss of close to around 400 odd crores. But that's more than made up for, by the other factors in the company, which is the internals. The EBITDA has come in a little over 6,162 crores. Again, the street was working with a number closer to 6,300 crores. And the net profit at 5,020 crores compares with our poll of 5,115 crores itself. The most important part for ITC this time around was the way cigarette business would grow. And out here, the street was working with a revenue growth of around 4 to 5%. Guess what? The company has gone ahead and reported a revenue growth of around 7.5% for the cigarette business and a 5% growth in the cigarette operating profit. So that's telling you that we have, seen a little more, or the back of the envelope calculations would tell you that the cigarette volume growth would actually be in low single digits, closer to 2 to 3%, as against street expectations of 0 to 1%. So cigarette volume growth has come in slightly ahead of expectations. We will get the exact numbers in just a bit. But for now, cigarette volume growth looks like it is 2 to 3% as against street expectations of 0 to 1%. The FMCG business, out there, a 7 to 9% growth was expected. The companies reported a 7% growth. But here too, the most important thing is the margin of the FMCG business. And out here, the margins have come in at 9%. This compares with 8.3%. So there has been a 70 basis points improvement in the FMCG margin with a revenue growth at the lower end of the range, 7% as against a range of 7 to 9%. Looking at the hotel business as well, they've reported a revenue close to around 898 crores, and this compares with 781 crores. So that in the hotel business also is a growth of close to 15%, bang in line with street expectations of 14 to 16% growth. So one would ask, where is it that the miss has come about? The miss for ITC's revenue has come in from the agri business, which has actually declined 3,100 crore as against 3,600 crore. Here the street was expecting a growth of about 5 to 6%. And the paper business also has seen a decline of about 10%. But out there as well, the street was hoping of pitting itself for a decline of around 5 to 10% as well. So short point, the internals of ITC are a lot better than what the frontline numbers would tell you. 16,579 crore on the top line. While it's below street expectations, it's led lower by the agri business. The internal, the core businesses of the company, which are tobacco, FMCG and hotels, are doing extremely well. The EBITDA is also lower largely because of the EBITDA decline that we've seen in the agri business itself. There's been a 100 crore decline out there. And in the paper business, there's been a decline of close to around 150 odd crores. So that explains why on a consolidated full company basis, the EBITDA is slightly below street expectations. But if you look at the core businesses itself, the FMCG EBITDA margins or EBIT margins have improved year on year. We've seen an improvement in, the growth of the cigarette business more than what the street was anticipating. The cigarette volumes have done a lot better as well. And hotels, which have actually seen a bit of a turnaround across the board, across the sector, have seen a growth of 15% on the revenue. And it's a lot higher on the operational front where, we have 200 crores of EBIT turning into 267 crores. So the core businesses of ITC looking extremely strong. The next trigger now moves on to the elections, thereafter the budget and what happens on the regulatory front. As of now, from the numbers that we have and the internals, it looks like a bit of a beat and, unlike what the frontline numbers would tell you. The stock, if you just pull up the intraday chart, the stock which has seen a correction of almost 50-60 rupees from the peak has actually seen a bit of an up move and currently sitting with a gain of about 1%. Prakash Diwan joins us now. Prakash, ITC, on a reported basis, the frontline numbers look like they're below expectations, but that's because they've been led lower by the agri business, which has problems of their own. When looking at the internals, the cigarette business has actually shown a revenue growth of nearly 8% versus street expectations of 4 to 5%. The FMCG business has grown 7%, higher than the others in the industry. And we've seen a big growth, a delta in terms of revenue and operational performance continue for the hotel business. Where do you stand on ITC and what do you make of these initial numbers that we have?
So first and foremost, Magnum, I think I would still be positively disposed towards this stock, and that's been for a long time. And what these numbers actually tell you is that some of these areas that we've always been waiting for growth to come by, especially FMCG and hotels.
All right, Prakash, I think we've got you on a bit of a scratchy line. We'll try and, reconnect with you. But just for those who've tuned in right now, to put those numbers back in perspective for you, the ITC has reported their fourth quarter numbers right now. The revenue has come in closer to, about 500 crores below what the street was anticipating. It's come in around that 16,599 crores. That compares with CNBC-TV18 poll of 16,992 crores. The EBITDA, 6162 crores. Street expectations were close to 6,300 crores. And the net profit at 5,020 crores as against street expectations of 5,115 crores. While the frontline numbers are below street expectations, the internals are strong, and that explains why the stock still holding up in the green. Prakash is still back with us. Prakash, I hope we can hear you now. We've got you on a better line. Please go ahead.
No, so I was saying, one time I'm quite positively disposed towards this stock. And the two areas that seem to be very encouraging, while agri has been a bit of a letdown, is that the FMCG numbers have grown. And you can imagine if that, if the company starts firing on that cylinder, it's going to go places. And the second thing is the hotel business, which is due for some sort of a restructuring, and on a standalone basis, if it starts seeming promising from what these numbers tell you, there's very clear indication. The theme is very positive, the environment is conducive, and the business is growing. So I would be very disappointed with a little bit of a off the mark in terms of expectations being slightly higher and the numbers being lower. I think the stock should do very well from this set of numbers. And you actually have a lot of triggers that are now building up once again. So, with the way the back overhang is gone, the numbers tell you that what's likely to grow will grow on a secular basis and not just on a quarter-on-quarter basis. I think for the next couple of years, you'll see growth from hotels and FMCG, apart from the cigarette business also, of course, tagging along. So very positive on this.
Take that point. Shirish Pardeshi, who's the co-head research Centrum broking, joins us now. Shirish, what were you penciling in when it came to the cigarette volume growth and cigarette revenue growth? The company's reported nearly 7.7% jump in the cigarette revenue and almost 5% jump in the cigarette EBIT.
Yeah, I think number came little closer, though it is tad lower in FMCG. But my guess is that cigarette volume should be in the range of about 2 to 3% if I give the benefit of 3% price increase, what has happened, and mix change. So, but overall momentum looks like in a weaker rural environment, this number looks better. While in terms of FMCG, though, the expectation falls short by about 100 basis points. But I think given the base and the food categories are doing excellently better, I think the momentum for FMCG has picked up. Probably the EBIT margin decline could be saying that the price element would have adjusted to certain level, and because of that, the EBIT growth would have been little lower, to my understanding. While agri was expected to come lower than the base, and I think it has come little 13%, which is decline, which has come. Paper, I think the inventory adjustment should have by far now adjusted because of the international pulp prices were lower. But I think I would expect given the FMCG part of the business and the recovery in the paper business with the inventory settlement, I think there is a hope. Obviously, maybe another 1 or 2 quarters we will see the hotel demerger, which will have. So, but the good positive part is that company is given a 7.5 rupees final dividend. I think that should be also cheering, and that's why maybe that could be taken positive.
All right, 7.5 rupee final dividend. Your estimate is close to 2 to 3% cigarette volume growth. The street was working with a number anywhere between 0 to 1%. So on all parameters, looks like it is a bit of a beat in the tobacco business. The FMCG, we take your point, it's coming at the lower end of street expectations of 7 to 9%. The revenue growth is 7% out there, though the margins have improved. Agri business has weakened. Hotel continues to do well. So I guess that's all the time that we have right now on ITC. So if you just, all right, we'll, just to reiterate those numbers, revenues a little over 16,579 crores, net profit at a little over 5,000 crores. And we do have, the cigarette margins which have seen a bit of a dip, but no problems as far as cigarette volumes are concerned. Estimates are it could be anywhere between 2 to 3%, which is about 100 to 200 basis points higher than what the street was anticipating. Prakash is with us still. Prakash, would you go and buy the stock at these levels?
Absolutely. See, look at the kind of scale that the company has achieved, and we're talking about the margin improvement even with that. So I understand the disappointment on top line, but then that could be more to do with pricing not being able to go up, volumes still to kind of in some of the categories to rev up. All that is transactional, Mangla. But on a fundamental basis, I think the stock offers you such a good opportunity to participate in some very fast-growing themes, which no other stock does on a consolidated basis. So I definitely believe even at this level, it's worth buying. And of course, as a matter of disclosure, I have this in my long-term portfolio since a long time.
All right. We also have Deven Choksey joining us. Deven, ITC numbers, you've looked at them now. What are your thoughts on the initial numbers that the company has reported and the internals?
Hi, Mangalam. Good afternoon. Well, I think initial first reaction, I think the numbers are pretty much in line with expectations. Fortunately, I think the margins are also, I think, protected to a greater extent. Unlike, I think, many other FMCG companies where I think you had a situation about the pressure on the margin, out here, it appears to be, I think, on a protected side to a greater extent. Though I haven't seen the breakup across all the verticals, but would like to believe that I think the numbers are by and large, I think, in line with expectations. The cigarette sales probably, I think, has been slightly on a higher side, but I think that shouldn't be an issue. Because other places, I think in other verticals, the numbers are looking, I think, relatively more stable, I believe.
All right. So let me just give you the breakup, Deven, for your benefit and for the benefit of our viewers who've just tuned in as well. The cigarette business has posted a revenue growth of 7.7%. On the gross level, the revenues are close to around 7,925 crores. The FMCG others business has seen a revenue growth of 7%. On a gross basis, the revenue is close to around 5,300 crores. Out there, the margins have improved by about 70 basis points. Hotels continues to do well, 15% revenue growth, and the growth on the EBIT is a good, 30% as we speak. And the agri business is where we've seen a revenue decline of nearly 14%. Paperboards has seen a decline of nearly 10%, but that was largely expected by the street. So those are the internals. With these internals, what is your assumption on the volume growth, and what is your call on the stock right now?
So I think the fundamentals of the businesses remain intact. On the contrary, hotel business, I think, which is similarly echoed by the Indian hotels, I think looks, I think, pretty stable from the growth perspective. Given the volume that is taking place in form of, I think, the occupancy, and at the same time, I think, average room rate, I believe that I think this particular business is also going to be up in the current financial year, that is 24-25. Of course, we would like to hear more from the management on when the commentary comes on this particular subject. But I think we remain distinctly bullish about the two verticals. One, definitely the hotel business, and the second vertical is FMCG business. Both these verticals have relatively larger ability to contribute to the performance of the company.
All right, Deven, Prakash, Shirish, thanks a lot, all the gentlemen, for joining in and giving us a quick view on what ITC results look like. With that, we're closing in, towards the closing end of the market. Closing bell will take the market action forward. But for all of them, once again, a wrap on ITC numbers. The revenues and EBITDA on a reported basis are slightly below street expectations. But in terms of internals, they are largely in line or mildly better than expectations when it comes to the cigarette business. In particular, 2 to 3% is the estimated volume growth as against street expectations of 0 to 1%. FMCG revenues have grown at around 7%. The street was working with a number of 7 to 9%. Margins have improved out there as well. Hotels continues to do well. The weak areas of the company have been agri and the paper business. The stock at the high point of trade. Not just